Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. RBA delivers surprise hike in hawkish policy recalibration. 2. Trump-Modi trade deal slashes India tariffs to 18%. 3. U.S. manufacturing surges in biggest jump since 2023. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. RBA delivers surprise hike in hawkish policy recalibration. Primary asset classes impacted: Australian dollar, AUD/USD, AUD/JPY, Australian equities, ASX 200, banks, REITs, AUD sovereign bonds, 3Y, 10Y, commodity currencies, global rate expectations, and central bank policy divergence. What happened? Reserve Bank of Australia raised cash rate 25 basis points to 3.85% Tuesday, first increase since November 2023, surprising markets despite split consensus. Governor Bullock cited persistent inflation, exceeding target band and tight labor market, justifying aggressive move. Decision contradicts global easing bias and marks hawkish recalibration, prioritizing price stability over growth. Why it matters. The surprise hike signals central bank willingness to tighten despite fragile growth and China slowdown concerns, testing whether inflation credibility trumps economic momentum globally. RBA's aggressive stance pressures ECB Thursday and other developed market central banks facing similar inflation persistence. Australian dollar strength and equity weakness ripple through commodity currencies and Asia-Pacific positioning, while extended higher rate regime compounds pressure on over-leveraged households and property-exposed sectors facing margin compression. Key numbers to remember. RBA hiked 25 basis points to 3.85%, first increase since November 2023. Trimmed mean inflation at 2.5% exceeded target. AUD/USD surged 1.8% to 0.7108 on announcement. ASX 200 fell 1.2% with banks down 2.1%. REITs tumbled 2.7%. Market repricing shows 40% probability of second hike by May. Cash rate futures now imply terminal rate 4.10% by mid-2026. What to watch next? Markets will assess whether RBA hike proves prescient or isolated as ECB meets Thursday and Fed speakers clarify March intentions. Sustained AUD strength above 0.71 would pressure commodity exporters and validate hawkish positioning globally. Australian economic data through March tests whether higher rates trigger consumption collapse or inflation moderates justifying pause. Statement language on further tightening shapes April meeting expectations. U.S. non-farm payrolls. Friday determines whether other central banks follow RBA hawkishness. 2. Trump-Modi trade deal slashes India tariffs to 18%. Primary asset classes impacted: Indian equities, Sensex Nifty 50 exporters, USD over INR, U.S. industrials and exporters, oil and energy, Brent, WTI, Russia-exposed assets, emerging market risk sentiment. What happened? President Trump announced historic trade agreement with Prime Minister Modi Monday, reducing U.S. tariffs on Indian imports from 50% to 18%. India committed to halt Russian oil purchases and procure $500 billion of U.S. goods over 3 years, including energy, defense, and agricultural products, marking major geopolitical and economic realignment. Why it matters. The deal reshapes global trade architecture and commodity flows, removing India as major Russian energy buyer while boosting U.S. export competitiveness. Tariff reduction benefits Indian IT services, pharmaceuticals, and textiles. supporting Sensex while strengthening bilateral ties against China. $500 billion purchase commitment redirects energy demand toward U.S. producers, potentially pressuring Brent crude while benefiting American LNG and agricultural exporters. The agreement validates Trump's transactional diplomacy. Key numbers to remember. U.S. tariffs on India slashed from 50% to 18%. India commits $500 billion U.S. purchases over 3 years. India will halt Russian oil imports previously averaging 1.8 million barrels daily. Shift benefits U.S. LNG exporters and Gulf producers. Sensex rallied 1.7% Monday. USD/INR fell to 84.23. U.S. industrial exporters gained with Caterpillar up 2.1%. Boeing rose 1.8%. What to watch next? Implementation details and timeline will determine actual trade flow impact and corporate beneficiary identification. Indian consumption of U.S. energy tests whether LNG infrastructure supports volume shift, while defense procurement specifics shape aerospace and weapons manufacturer outlook. Russia response to losing major oil customer could trigger supply adjustments impacting Brent prices. Other emerging markets face pressure to negotiate similar arrangements or risk trade disadvantages. U.S. ISM Services Thursday and non-farm payrolls Friday clarify domestic strength. 3. U.S. manufacturing surges in biggest jump since 2023. Primary asset classes impacted. U.S. equities, S&P 500, Dow, Russell 2000. USD pairs, DXY, EUR/USD, USD/JPY. U.S. Treasuries across curve, industrial and materials sectors, manufacturing-sensitive cyclicals. What happened? U.S. ISM manufacturing PMI surged to 52.6 in January from 47.9 in December, crushing consensus expectations of 50.3 and marking largest single-month jump since November 2023. Index broke above 50 expansion threshold after 9 months in contraction, driven by new orders rising to 54.5 and production climbing to 56.2 from prior 51.3. Why it matters? The surprise expansion validates soft landing narrative and eases recession concerns, suggesting manufacturing resilience despite elevated rates and Fed nomination uncertainty. Strong factory activity supports dollar strength, reduces near-term Fed easing pressure, and confirms consumer demand durability heading into earnings season. The print contradicts weak global PMI signals from China and Europe, reinforcing U.S. economic exceptionalism, while complicating inflation trajectory forecasts and justifying Fed higher-for-longer stance. Key numbers to remember. ISM manufacturing PMI jumped 4.7 points to 52.6 versus 50.3 expected. New orders surged to 54.5. Production climbed to 56.2. S&P 500 rallied 0.5% Monday to 6,976.44. Dow gained 1.1% to 49,407.66. Dollar index climbed to 97.28. 10-year Treasury yield rose 3 basis points to 4.27%. Market now prices only 15% probability. March Fed cut. What to watch next? Markets will assess whether manufacturing strength persists or reflects January seasonal distortions ahead of ISM Services Thursday. Sustained expansion would pressure Fed to maintain higher-for-longer stance alongside RBA hike, supporting dollar and weighing on rate-sensitive sectors globally. Services PMI becomes critical for confirming broad-based economic momentum. Key earnings from AMD, Pfizer, PepsiCo after close Tuesday reveal whether economic strength translates to corporate profitability, with tech guidance validating AI CapEx narrative. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.